It gives me great pleasure now to bring on board Jim O'Neill to talk about the fact that finally there is a official launch of vaccine in United Kingdom. Are other developed countries likely to follow this soon? What does that mean for the world? What does that mean for you and me? And what does that mean for financial markets? Let's discuss all that and much more with Jim O'Neill. Jim, fantastic to have you back. Thank you for joining us. Jim, just when things were getting muddy, or things got muddy late last week because of confusion from Astrazeneca, looks like Pfizer has managed to grab a deal.
Yes, it's a pretty special day yesterday with the news that the UK regulator has independently approved the safety of the vaccine, and probably by Monday of next week, it will be the beginning of people being actually vaccinated. And as I think we discussed last time, there's a huge difference between vaccine discovery and vaccination. But now we know, at least in terms of the process, it's real. And we can look forward to the same kind of process happening in so many other countries as we go towards the end of the year and the beginning of 2021 and through it. And so hopefully by this time next year, not only will be a large number of people in the UK that have been vaccinated, but we will be seeing a number of places around the world that will be benefiting too. In that regard, I'm sure we'll discuss it further, but the AstraZeneca one remains very important. So one has to hope that that will get through the approval process because it's important for two particular reasons. One, because it's actually cheaper than the Pfizer one, and secondly, very significant amounts of it can be transported a lot more easily due to the temperature issue, which of course for large parts of the so-called emerging world, that is going to be particularly important. So, but undoubtedly this is further good news, and it justifies the optimism that we continue to see in global equity markets.
Jim, do you think somewhere there is a strong vaccine politics which has started? The Russians are claiming that they have a breakthrough and they're sharing numbers of 100,000 people already vaccinated. The Chinese have their own claim. You've got the American companies which are also indicating something, and other emerging market countries also are claiming that they've got an antidote. So do you think, are we in for a lot of politics centered around vaccine now?
Well, I'm sure some countries will find it irresistible to play the sort of national bravado angle about where the vaccine has come from. But frankly, this is something which is a genuine win-win situation. The more vaccines we get from the more countries, and particularly if they've been approved by truly independent regulators, such as the UK one, the better it is for everybody. To some extent, it doesn't really make any difference where the vaccine starts first or is being created from. What's important is that it gets distributed as equitably and as quickly as possible all over the world. And let me remind your audience in that regard, this Pfizer vaccine, which is being rolled out first in the UK, is obviously primarily based around the capabilities of a German-based biotech firms. And so there's all sorts of international collaboration going on in all these vaccines anyhow. The AstraZeneca one, as you probably know, involves significant amounts of production at a plant in India. And so I'm pretty sure that means that India will be one of the earliest beneficiaries of that. And in a broadest sense, I'd also like to reiterate when I hear this reoccurring inappropriate comment, in my view, that we're in an era of deglobalization. The whole speed and the cooperation going on amongst healthcare research firms and pharmaceutical companies demonstrates to the contrary that globalization is alive and well.
Jim, equity markets, they always look forward. You understand that much more than anyone else. Can I say that stock markets or financial markets are factoring in the vaccine discovery news?
I think you can. in fact, again, as I think I've touched on with you a couple of times, going all the way back since April, it's been quite apparent to me that the equity markets have been a bit more logical than I hear many people often talk about, because they've essentially traded the combination of the rate of change of the infection curve, the prevention curve, and crucially, the vaccine discovery and implementation curve. And what's been crucial about the past few weeks, and hence why we had this huge global rally in November, I think I'm right in saying possibly the strongest single monthly rally in modern times, is because with the three vaccines that appear to have been independently verified to be effective coming from Western countries, and now with this news of it being rolled out in the UK, it gives a real belief of some finite end to this crisis, especially in the developed countries, which means that many of the sectors that have been so brutally shut down because of the pandemic have a serious chance of having some kind of vaguely normal life again by the middle of next year onwards. So, not surprisingly, many airline stocks, many tourist stocks, and I even noticed here in the UK, a publicly quoted live events company had its share price rise significantly. And this is all a very sensible reflection of what the equity markets smell as to what could be a very vigorous recovery from these sectors that have essentially been shut down for the best part of 2020.
Jim, allow me to take the clock back before I take it forward. Before world discovered a problem called Corona, the general view on the street was that equity markets were strong. Equity markets and financial markets had enjoyed a strong bull market from 2017 to 2019 or from 2016 to 2019. So if vaccine is discovered, it may simply take us back to levels of 2019, and according to commentators in 2019, the equity markets were due for a correction.
Well, markets always evolve in response to all sorts of ongoing changes of information. And as you quite rightly asked me, or pointed out to me, they discount the future probably better than often not always, but certainly generally better than many of us that comment about them. And I think there's a whole complex combination of things going on here. First of all, we might be in the process of global equity leadership having shifted away from the United States to the rest of the world. Secondly, linked to that is probably because in response to the pandemic, we've seen this remarkable fiscal and monetary stimulus, which is something in 2019, of course, markets had no reason to anticipate that we would get such remarkable generosity. We are seeing the pursuit of a fiscal stimulatory policy here in all parts of the developed world and many others that many people wouldn't have dreamt as being a feasible choice back in 2019. And amongst the reasons why this is so important is, of course, it's whilst a lot of people have been forced to not work or in many cases sadly lose their jobs, there's been a huge amount of income support provided to people during this period. So crucially, when we're looking at the cycle, the personal savings rate in many parts of the world have risen to levels that one would have not have dreamt could have been the case in 2019, which means on the presumption, and I hope it's more than a presumption, but on the reality that this presumption is right, that people become less concerned as more and more people get vaccinated, the likelihood of an acceleration in consumer spending and with it business investments in 2021, I think is quite logical. Where I do share the implicit question that you're throwing at me is that you can't ever ignore valuation. And if we start to see a different pattern of behavior emerging in the bond markets, and central banks start to be less friendly, then I think one would want to be quickly becoming a lot more cautious about some aspects of the equity markets. And to a degree, you can see some of this already playing out in the past fortnight, where you see some days where the leaders of the past few years, particularly the US tech sector, has a bad day, which has been quite rare in the past few years. And we see the leadership shifting to financials and other forms of cyclicals that would probably be beneficial from a change in the interest rate structure. And so I would imagine that that part of the equity market is going to continue to be a bit more tricky than it's been for quite some time. And it means it's both an opportunity, but a time for many people to be careful in terms of sector allocations, I would think.
So, Jim, let's pick it up from the initial part of your answer, which is that you expect equity markets to become much more widespread and it may just move outside the comfort zone of US. So, if you have to really pick up spots, last time it was BRIC, which included Brazil and Russia, which are commodity producing countries. So, if you have to pick your spots right now outside US, which way would you lean?
So as you know, I hate to endorse the phrase emerging markets, and now that we've just gone past the 19th anniversary of the BRIC acronym, which was partly designed to help position some so-called emerging countries as different from others, 20 years nearly later, I didn't succeed in that sense. But I do think, notwithstanding that comment, I find it hard to resist thinking that the environment is particularly supportive of so-called emerging markets. You have this extraordinarily friendly policy going on for many, many central banks around the developed world, particularly the US. And crucially, I haven't touched on this yet, but on top of responding to the pandemic, the Fed chose in August to shift its policy bias towards deliberately seeking some inflation above 2%, which is an important philosophical and practical change, which essentially implies that unless inflation picks up significantly, the Fed is going to be very generous for quite some time. And you've got some versions of the same thing happening in Europe and elsewhere. And as a result of it, the dollar's under pressure. Commodity prices, as we see almost daily, are accelerating. And this suggests to me, in general, and of course, there has to be some specific differences, but in general, it is a very supportive environment for so-called emerging markets, both their debt markets and their equity markets in particular.
Jim, when we saw a similar phenomenon last time when interest rates were low, dollar index was weak, money moved into commodities, and commodities have started rallying again. With the exception of crude, steel prices are gone up, copper prices have gone up, cocoa prices have gone up. Do you think inflation is coming?
Well, I think that when I think about the things that could go wrong next, I do find myself thinking that perhaps we shouldn't forget about the inflation threat, because ultimately, when you look at the generosity of monetary and fiscal policy, and let me start with fiscal policy, one of the things I see repeatedly being said by many Western governments is that we don't need to worry about the debt because the debt servicing level is so low. And in fact, it's being commented on in the newspapers here in the UK that the difference compared to 1 year ago is saving the UK government not far off £20 billion a year in terms of interest rate cost servicing. But if we were to see inflation starting to rise and the markets becoming quite rightly more concerned about that, fiscal policy operators would have to suddenly start thinking that it wasn't such a free lunch as they currently think. And not least because, of course, if you go to monetary policy, that might cause central banks to suddenly start being a bit more careful. And so keeping a close eye on actual inflationary pressures and importantly, reliable surveys of inflation expectations, together with the pace of economic recovery are all going to be really important as we go into 2021. And I say that in particular because I think there is a reasonable chance from what I can see of consensus forecasts that economic growth might actually accelerate in 2021 more than I see most people suggesting.
Jim, what are the chances that in the short term we could be in for a lot of back and forth between the new US administration and China? Could we be staring at another round of tariffs and trade wars, something which markets frankly are not prepared for? The view in the market is Donald Trump is going and trade wars are coming down.
Yes, that's another thing that's going to be around for quite some time. I think it's complex. I think what the markets are pleased, or let's call it relieved about, correctly, is that under Biden, the US is going to try and engage through the established international institutions, which is something I personally highly welcome. One of the things which has been particularly bothersome under the Trump years is essentially a deliberate effort to pull apart the whole international organizational structure, whether it be the WHO, the WTO, and even things like the G7 and the G20, which Trump has treated by and large with disdain. And I think what's welcome is that Biden is making it clear, both in what he says, but through his appointments, that the US is going to be at the forefront of trying to reestablish the importance of these institutions, and more importantly, probably to try and strengthen them. Whether that means the US is going to be less concerned about issues involving China, I think is a completely different matter. And it's my own impression, for what it's worth, is that the Chinese are probably more concerned about a Biden administration than they were with Trump, not least because they think the US will spend more time trying to build alliances with other Western democracies or other democracies all over the world in trying to confront governments that are not democratic about some aspects of fairness, whether it be elements of international trade or issues to do with security. And I think the Chinese were and still are more concerned about that. And to some degree, I find myself thinking that there are small signals that could be interpreted that the Chinese are starting to adjust their own behavior in order to be able to cope with a more concerted, thoughtful approach to trying to stop Chinese behavior in a way that the Western world broadly doesn't like. And you can take, for example, the very big messages they keep sending about their stance on climate change as being one, and the way the RMB has been allowed to appreciate, and the way they seem to be at the margin encouraging more and more opening of their own markets. These are all things that one would expect would be part of a more, let's call it, liberal approach coming out of Beijing. But obviously there are going to be things which would be a lot trickier, but I would expect the Biden administration is going to be pushing China about them. So there will be periods of confrontation going forward, that is for sure, in my view.
The fact that Janet Yellen, and she has been picked up or handpicked up for the core team to represent the Biden administration, it clearly means the kind of monetary policy they are likely to follow.
Well, I think that Janet Yellen is one of the names I was implying when I said if you look at the team that Biden has picked. I thought Janet Yellen did an extremely good job when she was chair of the Fed. She brought a slightly more lateral way of thinking, and may I add, also through her manner and demeanor, a sort of quite modest, understated way. But from anybody that you read that one would give credit to in terms of their authority, she has widespread respect all over the international community. And I think she's a symbol of how the Biden administration plans to engage. And it's to be highly welcomed because she has certainly shown signs historically of not only embracing the established forms of trying to pursue international policy coordination, but crucially, in terms of some of the complex domestic challenges of the way the world has been the past few years, perhaps has an even greater understanding of fairness about domestic labor markets and the rights of the less well-off than we often see in some people from business that get into such positions. So I think it's a highly welcome appointment having Janet Yellen in that seat.
Well, Jim, really appreciate your time. The fact that you took almost half an hour out for us from your busy schedule really means a lot to us and our viewers. As always, they're very grateful to you for guiding them and sharing your views, and especially at a time when we have so much of uncertainty. So really appreciate your time. Stay safe, Jim, and we'll touch base once again once the vaccination process starts in UK.
Thank you.